Let's deep dive then into IT, talk about what the future means for some of the other IT companies, how to read into TCS's numbers, valuations, as well as the demand trend. Sumeet Jain is joining in from ICICI Securities for just that. Sumeet, just if we were to talk about TCS in particular, do you think that this time around, the kind of commentary, especially that came about, really doesn't give much clarity as to whether or not the worst is over, what the future quarters could possibly bring, and that's going to be a bit of an overhang or a concern for investors in TCS?
Yeah, it was a mixed sort of a commentary from TCS if you look at. I mean, they clearly mentioned that retail, high tech, and BFSI in US and Europe continues to remain weak. But on the top of that, they also mentioned that the overall order pipeline is still pretty good. So there has been a right shifting of demand in terms of the next future quarters. And this is where we believe, the overall structural demand drivers for the sector in terms of cloud migration and digitalization, they still remain largely intact. But yeah, I think in the near term, there are challenges. Who knows, US might be going through a recession in terms of 35% probability assigned by the global analyst. So yeah, I think there is a bit of a risk in terms of the near term outlook. And this is where I think TCS management has been a bit cautious in terms of giving a clear mandate that we are out of the woods. And going forward, you will see a start seeing a strong growth in the coming quarters. But so I guess it's a wait and watch mode as of now. But if you talk about digital transformation and the cloud migration tailwinds, that are pretty much intact. So we are quite positive on the space from medium to longer term perspective, where we believe there is a right shifting of demand happening, where next 1 to 2 quarters might be a bit weak. So for TCS, we are expecting a 0.5 to 1% kind of a sequential growth in June, because there has been a delay in terms of conversion of pipeline to order book and then order book to revenues. But then I think from post June quarter, we believe the growth should revive back, not very strongly, but in a gradual way, where we are expecting a 2.5% kind of a sequential growth in the remaining 9 months of FY24, which will lead to overall 7% kind of a growth for TCS in the year FY24. So that's our expectations are with certain margin expansion for the year, given that the supply side headwinds are largely behind and the attrition is cooling off. So yeah, I think near term could be a bit challenging. And as far as the multiples are concerned, TCS last 5-year average historical 1 year forward multiple is around 25 times. It is trading at around 25 times FY24 and almost 22 times FY25. So we believe, given that the structural demand drivers are intact, these stocks can trade at last 5-year average multiples, and the earning growth of high single digit to low teens will drive the stock price returns. So yeah, that's our view on the stock. We are buy rated on the stock with almost a 25-27% kind of an upside. And yeah, I think other than TCS, we are also positive on, yeah.
Right, Sumit, do a comparison for us with respect to how the stock prices you believe are likely to trend for Infosys versus TCS?
Yeah, so we have a higher upside on Infosys, almost a 28-29% upside now. And the reason for that is in the last couple of quarters, the discount at which Infosys is trading at TCS, that has widened a bit, primarily because of the margin concerns in Infosys, where some of their recent deals like Daimler have diluted the margins because of the integrated nature of the deals. And this is where I think we believe that in the second or third year of these deals, typically the margins expand. And this is where the earning growth of Infi can outperform TCS in the near to medium term. So this is where we have a higher upside on Infosys, but we have buy rating on both the names. And other than that, if you look at the first half seasonality in any given year, then Infosys QOQ growth in the first half of any financial year is better than TCS. So from that perspective, in the near-term quarters, you will see a slightly better growth at Infi than at TCS. So primarily these two reasons, we are more positive on Infi.
Saying today Infosys will report better numbers than TCS?
Not really. Actually, we are expecting them to report around 0.1% QOQ growth in CC terms, which will enable them to end up the full year at 16.4%, which is obviously at the higher end of their guidance. And given that TCS reported around 0.6% CC growth, where on a seasonality basis, typically December and March quarters are pretty weak for Infosys compared to TCS. So yeah, I think we don't expect a very strong growth numbers from Infosys as far as this quarter is concerned. But yeah, in terms of guidance, we are expecting them to give a guidance of 6 to 8% in constant currency terms for FY24, and in terms of EBIT margins around 21 to 23%. And the confidence that we are having in 6 to 8 is primarily because of the guidance of 8 to 10% what Accenture has given for the year ending August 23. And also recently, if you look at the Gartner also has revised upwards their growth forecast for IT services spending for CY23 from earlier 5.5 to 9.5%. So I guess despite all the banking crisis and the events we have seen with Silicon Valley Bank, Signature, and Silvergate, and then with Credit Suisse and UBS, despite that, the technology demand environment has not derailed. Yes, there has been a postponement of discretionary projects, but overall demand environment has not derailed. So it's more like a right shifting of demand than the complete cancellation.
Sounded a bit different when the TCS management was talking about, yes, not a derailment of sort, but definitely there is an impact on the BFSI spend, especially in US, at least that's what my read through was. But just, Sumit, coming back to the point of, the valuations as well and how they stack up. For Infosys, do you think there is bigger room on the downside as well? Because the street was penciling a lot more. If the guidance comes in at a range which is, let's say, 5 to 6%, does that leave room for a bigger disappointment and bigger EPS cuts on Infosys?
So not really, actually. I mean, typically they give a guidance of 2 to 3 percentage points range. And in the past, like we have never seen them giving a very narrow range like what you mentioned. And given the demand environment, what Accenture is seeing, or generally the other global tech agencies like Gartner is seeing, and even for that matter, if you look at the order book of TCS, it wasn't that weak in the overall scheme of things. So I guess even if they start at 5 to 7, Street is largely at around 8-9%, if I'm not wrong, for FY24. And typically, Infosys management has been known to start the guidance in a very conservative way and then increase it as they go through the year. So starting at 5 to 7 will not lead to major top line growth cuts on the street, in my view. But yeah, if it is 4 to 6, then yes, the street estimates will get cut by around 2-3%, and sentimentally it will be more negative. So we could see maybe a 5% kind of a correction in the stock on the back of it if the guidance comes in at around 4 to 6%.
Okay.
All right.
So that's the take coming in as far as the tech sector is concerned. Still a bit more, positive about the sector. That's the word coming in from Sumit. But